Imagine this. The same amount of money in your wallet today buys less tomorrow. You're not imagining things. That's inflation at work. It's a silent force that erodes the value of your money over time, making everyday goods and services more expensive while your purchasing power shrinks. But here's the kicker. Inflation doesn't just affect your daily expenses. It can reshape your entire financial future if you're not prepared. Today, we're unpacking how inflation works, how it impacts your money, and most importantly, how you can hedge against it to protect and even grow your wealth. To understand inflation, let's break it down. Inflation is the rate at which prices increase over time, reducing the value of money. Imagine you had $100 10 years ago. Back then, it might have covered a nice dinner for two. Today, that same $100 might barely get you takeout. Inflation averages around 2 to 3% annually, but in certain years or economic conditions, it can spike much higher. While 2% might not seem like much, over decades, it compounds, significantly diminishing the value of your savings if you're not actively countering it. But inflation isn't just an abstract concept. It shows up in your grocery bill, housing costs, and even the price of coffee. It's the reason people say, things used to be cheaper. The key takeaway here is this. If your money isn't growing faster than the rate of inflation, you're effectively losing wealth. So, how do you combat this silent thief? By hedging against inflation with smart financial strategies. First, let's talk about investing. Keeping your money in a traditional savings account with minimal interest might feel safe, but it's not enough to outpace inflation. Enter the stock market. Historically, the market has averaged returns of 7 to 10% annually, far above the average inflation rate. Index funds, ETFs, and dividend-paying stocks are great starting points for employees who want to grow their money steadily while beating inflation. Diversifying your investments across industries and regions further reduces risk, ensuring your portfolio can weather economic fluctuations. Next, let's consider real estate. Real estate has long been a favorite inflation hedge. Why? Because property values and rents tend to rise with inflation, protecting your purchasing power. Owning a home or investing in real estate properties allows you to benefit from this trend. Even if buying property isn't feasible for you right now, real estate investment trusts, REITs, offer a low barrier entry point. These trusts pool money to invest in income-producing real estate, giving you the benefits of property ownership without the hassle of maintenance or management. Another effective tool is commodities. Commodities like gold, silver, and oil often retain or even increase their value during inflationary periods. Gold, in particular, is considered a safe haven asset because it's seen as a store of value. While commodities can be more volatile than other investments, including a small percentage in your portfolio can provide balance and a hedge against rising prices. One of the easiest ways to hedge against inflation is by holding inflation-protected securities. Government-issued bonds, such as Treasury inflation-protected securities, TIPS, adjust their value based on the inflation rate, ensuring that your investment keeps pace with rising prices. TIPS are low risk and a great addition to a diversified portfolio, especially for those seeking steady returns. But what about your daily finances? Adjusting your financial habits to account for inflation is just as important as long-term investing. Start by regularly reviewing your budget. As prices rise, certain expenses might balloon unexpectedly. For example, food and transportation costs often increase faster than other categories. Identifying these shifts early allows you to adjust spending elsewhere and maintain financial balance. Another key strategy is to focus on increasing your income. While controlling expenses is crucial, boosting your earning power is an effective way to stay ahead of inflation. Negotiate raises, develop new skills, or explore side hustles that can bring in additional income. The more you earn, the better equipped you'll be to manage rising costs and continue saving and investing for the future. Now let's talk about debt. Inflation can actually work in your favor if you have fixed-rate debt, like a mortgage. As inflation increases, the relative value of your debt decreases, making it easier to repay over time. However, avoid high-interest debt like credit cards, which can quickly become unmanageable in an inflationary environment. If you have variable-rate loans, consider refinancing to lock in a fixed rate before interest rates rise further. Another often overlooked inflation hedge is investing in yourself. Education, certifications, and skills development can increase your earning potential, allowing you to outpace inflation over time. Think of this as investing in an asset that appreciates your own ability to generate income. So, what's the ultimate strategy to hedge against inflation? Diversification. By spreading your money across multiple asset classes, stocks, real estate, bonds, and commodities, you're creating a balanced portfolio that's better equipped to handle inflationary pressures. No single strategy is foolproof, but combining several approaches reduces risk and increases your chances of maintaining and growing your wealth. Finally, stay informed. Inflation doesn't happen in a vacuum. It's influenced by economic policies, supply chains, and global events. By keeping an eye on inflation trends and adjusting your financial plan accordingly, you can stay ahead of the curve. Tools like financial news apps and inflation trackers can help you monitor changes and adapt quickly. Inflation might seem like an invisible force working against you, but with the right strategies, you can turn it into an opportunity to grow your wealth. By investing wisely, diversifying your portfolio, managing your expenses, and increasing your income, you're not just protecting your money. You're building a financial future that thrives no matter what the economy throws your way. Start today, stay consistent, and watch your wealth grow stronger than inflation.